Hello, happy Monday. Welcome back to my channel. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. Thanks for stopping by. If you're new here, I have these videos every Monday where I talk about what's going on in the Phoenix real estate market. And if you're not new here, thanks so much for your support. I really appreciate it. This week, I am talking about a couple different things. I want to start by talking about rentals, but then also want to talk about the CMI, which I'll explain more in a second, where that's heading and why it seems like some things might be changing. So let's get down to it. If this is your first time, you may want to hit the subscribe button, hit the bell for notifications so you don't miss this video and all other videos that I post during the week. And I do want to say a thank you to the Cromford report who provides all of this awesome data. I'm a subscriber to their report and get all of this great info to share with you every Monday. So let's start by talking about rentals. And the reason this is important is because rentals are affected by changes in the market much quicker than the home purchasing and selling market is. Leases can be signed and recorded, and all of that information is at our fingertips quickly, whereas buying and selling a home usually takes at least 30 days for the most part with the escrow process and lending process. And so the changes that we see in the home buying market are lagging typically, whereas rentals, it's pretty quick. So what's going on with rentals? Our current listings are up 44% right now as compared to last year at this time. And the reason that's important is because when you have more supply than you have demand, prices start to go down. And so we're starting to see that with the rental market, which is pretty surprising because all I've been saying about rentals for the last 2 years is that there are no rentals to speak of and rates have continued to go up. So they finally plateaued and now we're looking at an increase, even more of an increase in the active listings, which has started to decrease the rental rates. So yay, if you're a tenant, there is some hope for you. And if you're a landlord, I'm sorry, but you're still getting a really great rental rate. These rates are still very high. So right now, $1.80 per square foot was the rental rate a month ago, and now it's at $1.69 per square foot, and it went down 6% over the last month, and that's largely because we've seen an influx of new listings, so there's more competition on the market. If we look at the last year, rental rates have gone down by 15%. They were $1.99 a square foot last year. So a 15% decrease is pretty big. I have the date here, August of 2021, because that's when we started to see more new listings hit the market. That's when that kind of stagnation of no new listings hitting the market for rentals finally stopped. We started to see an increase, and now here we are looking at how that increase in rental supply has started to decrease the dollar per square foot that landlords are charging. So that's where we're at with rentals. Now, is this what's going to happen in the housing market? I don't know, because our darn supply is not increasing. So I don't think it's going to be a similar situation, but we got to talk about demand. So let's talk about this now. If you're new here, I am referencing the Cromford Market Index, which is a proprietary algorithm that the Cromford report created to help us understand supply and demand in the market. And basically, if the index is somewhere around 100, that is a normal number. We're in somewhat of a balanced market. If it is anywhere over 110, we're in a seller's market and prices will continue to increase. Anything under 90, we're in a buyer's market. And so this week we're sitting at 438.8, so very much in a seller's market. But what's interesting about this is that number was in the 450s not long ago, and in the 460s and 475s not that long ago. So 438 has definitely been a decrease. However, I want to remind you, we are not out of a seller's market by any means at that number. Now, our supply is not changing. It's been pretty low at 24.2. In some, a few weeks ago, maybe a couple months ago, like 23, 22-ish. Regardless, it's low as heck. Okay, so 24.2 means that we are 76% below normal. for our supply. That's a long way to go to get back to the supply that we need for our market. But what has been changing is this demand. This has been our changing factor lately. So it's at 106.3. Anywhere between 90 to 110, according to the Cromford report, is a normal range. So our demand is technically in a normal range now, which I haven't been able to say for a long time. And this is largely due to interest rates. I'm sure that's not a surprise to you. Rates have gone up so much in the last 2 months. If you were looking at buying a house at the beginning of February, probably, you may not be able to afford that same house, even if the price didn't change, just because rates have changed so much and it changes your monthly payment. So the increase in rates has definitely kicked buyers out of the market because either they can't afford what they thought they could afford now, or they don't want to pay it. So this demand is something to watch, because I do believe that interest rates are a big factor in affecting our demand right now. And this is what has been really bringing down that CMI to 438. We'll see where demand goes if that continues to go down, but that is what's happening. And I have some low battery there. I have some kind of shocking news on a few things. So the CMI over the last month has decreased by 6.4%. But over the last week, it just decreased by 3.2%. So half of last month's decrease just happened in the last week. So that's an acceleration in where we are headed with the CMI. So we need to watch that. I have a couple cities here, Maricopa and Tempe. Those are the only two cities in the last month that had an increase in their CMI. Everything else went down, except for Gilbert, which didn't change. But everything else went down. And the worst of all, Cave Creek. Cave Creek really decreased in their CMI over the last month. Now I have a surprise for you. I'm going to show you the table of every major city and its respective CMI so you can get an idea here. Here we are. Okay, so some of the biggest offenders, we have Fountain Hills went down by 15%, Cave Creek 19%, we have Surprise at 14%, Buckeye 14%. Look how many red arrows there are on this table. This is majority of these cities changing in the direction away from sellers, making it closer to a normal market. Now, what I want to point out before I freak anyone out, you got to look at these numbers here all the way along here. I mean, those are all well over 110. We are still very much in a seller's market, but it's weakening a little bit, right? We're seeing the majority of these cities have a decrease, and some pretty significantly. Like I said, Tempe and Maricopa are the only two that still had green arrows there, as well as Gilbert, but they didn't change, only 0% there. But and Tempe and Gilbert, or Tempe and Maricopa, didn't have too much of a change, although Maricopa at 7%, that's a good sign. So if you're a seller and you're in any of these cities, let's keep an eye on what's going on, because demand is clearly affecting the overall CMI and it's affecting it in the various cities. Now, if you are considering selling and you're wondering what your home value might be, I have a link in the description below. You can click that and get an instant home value. Or I'm happy to create a CMA for you if you'd like a little bit more detail. And if you're looking to buy in this market and you're wondering what you can get for a certain price range, I have my link to my MLS below, and you can feel free to use that to do your home search. So that's all I've got today, you guys. Some interesting stuff going on with the CMI. We definitely have to watch that. Demand is definitely changing. So if you've been thinking about listing your home, you have to keep that in mind, how buyers are feeling right now with interest rates and how many buyers are still left in the market. Our supply, not changing. There is not a chance right now that our supply is getting so high that all of a sudden prices are going to drop. We haven't had much movement in that. And I've said before, and I'll say it again, interest rates also affect sellers, right? Because why do you want to sell your house that you probably have a great interest rate for if you bought years ago, a couple years ago even, and then go buy at a higher rate unless you're paying cash. So these increases in interest rates are also affecting people listing their homes too. So it does kind of deter them from that depending on where they're going next. So I hope all of this was helpful for you. Comment below, let me know your thoughts on where the CMI is headed. And if you have any questions, you can reach out to me anytime by call, text, or email. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart. Thanks so much for watching and have a great week.